Good morning everybody, and this is your S&P setups for today. So bit of chaos yesterday. So basically data the last 2 days has not been pointing to early interest rate cuts. It's been pointing to holding interest rates where they are for a bit longer. So obviously the market is a little bit annoyed, and that's pretty much what we see. Now, key thing here, we have been in this bull channel for a number of weeks, basically from the 2nd of January. So from when we started, we've been climbing, and we've had a good run, just over 10% climb through the year so far in the first quarter. But things don't go up forever. At the moment, we're still very much in a bull trend, but because we have this 51, let's just call it 5200, that we are not getting through, it is starting to look like a potential double top. Now, there's a lot that needs to happen before that double top plays out, and obviously the low of the week currently at 5100 is the line in the sand. We do have a crossover of the oscillators, and we're pointing down. Haven't crossed through the 80 just yet, but that is still on the cards, potentially on the cards, should we say. And buyers are still fighting. They're still very much fighting. Now, the other thing that you do need to do here, because it is fairly significant, I'm not going to draw the whole channel, but this is the bottom of the channel. The buyers will come in here because it's been working all year, so they're definitely going to take a shot at it, and it could build a flat top triangle, if they get it going. So the bulls are still sort of in control. Bears are trying to move this in a different direction. So when we start looking at this on the 3-hour, it starts looking chaotic. You can see where the buyers come in, and look at how the buyers came in going into the close. Look at my oscillators, that's also supporting that view. We are below the faster moving averages, but I'm not sure. I don't trust what I'm seeing here. This big engulfing bar is telling, because look at how many bars it took out. Most of this week's sideways price action has taken out. Yes, buyers are coming in off structure here, and you can actually just add, just picking up this little pin bar here, and that's at 51.28. So that is the zone, and you can see how important that is because it is the bottom of the channel. So drop below this pin bar at 51.28. I would expect us to hit 5100. I would definitely expect buyers to come in off here, try and flip this into a bigger range and move to the upside. But a rejection between 51.28 and 51.53 is going to be telling. So 51.50 is obviously a level we've been looking at all week. We've been talking about it all week, the significance of it. 51.52 is the exact level. But you can see how we're trying to find support here at the moment. Not that I trust this, to be honest. This can go one of two ways, obviously, but the trend is up. So I am very cautious at the moment. Not really looking to try and second guess this market right now. So you look at this drop, and then the buyers stepped in, kept forming lower lows before the buyers kept stepping in, kept trying to prop it up. I'm not entirely convinced that they're going to succeed, but then I'm also not entirely convinced that the bears are going to succeed. So the minute you get down to the lower time frames, and yesterday was a horror day to try and trade. So obviously there was a bit of structure that was starting to brew the bottom of the range. That didn't materialize. We dropped. You would have then thought, okay, so we've broken through some structure, we're going to get moving to the next level, and we didn't. Look what happened. We went sideways and very volatile as well. So we're talking 260 point swings, 0.5% move in the market, so 0.5% down, 0.5% up, 0.5% down, all the way through the session. Definitely taking a long weekend on this one, so not really going to bother with this. Oscillators all over the place, confusion reigns at the moment. We could just move back up to this area at 51,100, 51.95, 5,200, sorry. We could move back up to that area, or alternatively we could drop it below this little zone that I've drawn at 51.60 and 51.50. I'll drop below, come back and reject it, but then you've still got this trend line to deal with. So yeah, I'm not convinced either way, guys. I don't think anybody really knows what's going on. So the data is pointing to an economy that is not struggling, but under pressure, I think is the right word. Consumer spending is down. So people aren't spending money. So at the moment, there's it's complete confusion. If you look at the dollar as well on the forex market, you'll see a very similar picture. There's no real trend forming, and I think this is just going to spill over into the indexes. And we've had 10% gain already for the year, so logic says we should pause somewhere along the line. And the big question is this the pause? Are we going to retrace, or are we just going to continue sideways between these multiple levels that we have at the moment? Your guess is as good as mine at the moment, and I think I'd rather wait for a little bit of better structure before trying to get this. You look at the 3 hour, it does look like the buyers are coming in, but come down to the hour and you're going to see we're sort of just hovering in between the moving averages. So a drop below the zone that I've given you sort of breaks the moving averages as well. Then you've got the trend line, a break of that trend line and a rejection of it is going to be telling, because then I think that's going to be an early sign for a bigger move to the downside. But I'd want to see that happen before chasing shorts, and at the same time I'm not too keen on what I'm seeing on the 15-minute for an opportunity to the upside. So this, when the oscillators start doing this, I get worried. It just indicates confusion. Anyway, I'm not trading today. We will sit back and watch this for today. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.